Welcome everyone. This is Professor Tangankar dealing with modern auditing and practices for 6th sem students. This is the revision from first unit. So let's begin with it. Now, what do you mean by audit? Now, audit is examination or inspection of various books of accounts by an auditor, followed by physical check of inventory of making sure that all departments are following documented system of recording transaction. Now we already know that auditor has to check or examine the various books of accounts. He should check whether the financial statements are showing true and fair value of the business or not. Okay, he should see that the financial statements are giving accurate result, ascertaining accuracy of financial statements, and provide this to the organization. So he should also have a physical check of inventory being done. He should check physically whether what amount of stock is recorded in the financial statements, is it present, is it physically present or not. Okay, next, advantages of audit. Now, in case of advantages of audit, there are various advantages, but to list a few for the business and shareholders. Now, when you have audit being done, it will help the business concern and shareholders during the sale of business. That is, they can have proper valuation of business being done during the sale of their business, or while admitting a new partner, or while having addition of partner being done. For the management, it helps in prevention and detection of fraud and error. For the creditors, it helps in giving long term and short term credit grant, what amount of credit to be given, to what extent, to what period of credit being given. For the sale of government, for the government, it helps in assessment of income tax, sales tax, etc. Now, what are the objectives of auditing? There are mainly two objectives of audit: primary objective and secondary objective. In primary objective, the auditor must examine the accuracy of books of accounts and express his opinion on the financial statements. That is, he should see that the financial statements are being checked, are being examined by him, and once he finished the checking of the books of accounts, he must then express his opinion by giving an audit report on the financial statements. The secondary objective, which is quite important based on your examination point of view, that is the secondary objective. In this, you have two objectives, that is the detection and prevention of fraud and error. Now, coming to detection of error, we know what is an error. That is one thing, if you do anything which is unintentionally, that is called as error. By mistake, if you happen to do something unintentionally, then that is error. Now, there are different types of errors, and you will have 5 marks question or 15 marks question onto these types of errors. So let's deal in detail as to what are the different types of errors. Now, here you have 5 types of errors. One is the error of principle, error of omission, error of commission, error of duplication, and compensating error. Let's deal with the first one, that is error of principle. Now, what is this error of principle? When the basic principles of accounting are not clear to the accountant, then that becomes the error of principle. That is, when the accountant is violating or violation of company accounting principles, then it becomes a error of principle. Now, what happens here is, for example, if the transactions which are to be debited are written to the credit side, or the transactions which are to be credited are written to the debit side, then that becomes an error of principle. Or using wrong liability account for an expense, that is, you're having wrong accounting being done, crediting the wrong type of asset account for a payment, or debiting the wrong client account in an account receivable transaction. Next one is error of omission. Omission means you're omitting, you're forgetting. Okay. Now error of omission happens when you forget to enter a transaction in the books of accounts. You're either omitting the transaction completely or partly, then that becomes an error of omission. Next, error of commission. Error of commission are often caused due to the mistake committed by the clerk. They are also called as clerical errors. These errors arise due to negligence. Now here, for example, if you have purchased a product which is worth 1000 rupees and you are writing in the purchase book as purchased a product which is of just 100 rupees, instead of writing 1000 you're writing there as 100. Now that becomes an error of commission. You're omitting the transaction completely or partly. There's a clerical error, that becomes an error of commission. Error of duplication. Now error of duplication is wherein one entry is being posted twice. That is, you're posting one entry double twice. That is called as error of duplication. You are having a double entry being done for the same transaction, that becomes an error of duplication. Coming to the next one, that is error of compensation. One error being compensated by another error, that is called as error of compensating or compensation error. Now here, a compensating error is an accounting error that offsets another accounting error. You're compensating one error with another, that is called as compensating error. Now let's deal with the second half of the objective, that is types of fraud. We have the second objective is secondary objective. I'll just get back to the main slide. We are dealing with objectives of auditing. In that we have seen primary objective, wherein examination of books of accounts, and next is expressing the opinion on the financial statements. We have dealt with the second objective, that is secondary objective, in the detection and prevention of error, wherein we have seen different types of errors. These are the types that we have studied, and now we'll be dealing with the next one, that is detection and prevention of fraud. So what is fraud? Fraud is something which you do intentionally. You have some intention behind it, and that's the reason you have fraud being done. That is called as fraud. Okay. Now different types of fraud. There can be misappropriation of cash, misappropriation of goods, or misappropriation of accounts. Now, what is misappropriation of cash? Wherein you are trying to misappropriate, that is, you are trying to make some fraud by use of cash, that is, you are trying to have theft being done in terms of cash, petty cash has been stolen, or you are trying to adjust the petty cash, fictitious payments have been made, then that is called as misappropriation of cash. Misappropriation of goods, wherein you are issuing a false credit notes to the customers, goods have been stolen from the warehouse, then that becomes misappropriation of goods. Misappropriation of accounts, false entries in respect of expenses, sales, purchase, etc. You are trying to put a false entry in respect of maybe in terms of expenses, or in terms of sales, or in terms of purchase, then that becomes misappropriation of accounts. Now coming to the next aspect, that is different types of audit. Under this you have three types. First is based on ownership, second is based on time, and third is based on objectives. In first one, that is based on ownership, you have proprietorship, partnership, companies, trust, cooperative society, government department, etc., which we have already studied. Next, based on time, interim, final, continuous balance sheet. Based on objectives, independent, financial, internal, cost, tax, government, and secretarial audit. Now I'm not going to deal with all these because we have already studied this. I will just deal with one which is in terms of continuous audit, because this has been continuously asked in the question paper. So I'll just deal with what is continuous audit. Now this continuous audit is in terms of based on time, and we'll be dealing with continuous audit. Now what is this continuous audit? Audit which is being done on regular basis, which has been conducted on ongoing, that is on regular basis, then that is called as continuous audit. Continuous audit requires the ongoing assessment of accounting practices and risk control. Its auditing practices helps continuous assessment the effectiveness of control. Continuous audit are most often used when new procedures are implemented as a way to track efficiency. So most of the time when you have continuous auditors, when the auditing is being done on regular basis, when it has been done on continuous basis, then that is called as continuous audit. Mostly this has been implemented when you have new procedures or new things being implemented, then to track the efficiency of those new things which have been implemented, for that you have continuous audit being done. That's it. Thank you.